What's up, guys? This is Casey, and welcome back to the channel. So today, we're going to discuss why I think we are absolutely in a recession. We're going to talk about why I think it's going to get much worse. And then we're going to talk about what you can do today to save some money and to make some money in this historic recession that I think is coming up. So let's just kind of hop into this. So first things first, if you look on the page here, there's a few reasons why I think that we are going to hit a major recession. Now, there's one of the people that I follow on Twitter called Kevin Malone, and he talks about how and he overly simplifies it, when the yellow crayon crosses the blue crayon, the stock market usually drops 50%. So what does that mean? He's using an oversimplified way of showing that when the 10-day monthly average crosses the 30-day monthly average, the stock market hits a recession. And I didn't believe him. I had to actually go online and look this up myself and kind of back test it. And lo and behold, he's right. If you take a look at the year 2000, the 10-day monthly average crossed the 30-day monthly average. And what do you know? Boom, we hit a recession. That was 2000. And take a look when the 30-day crossed the 10. That was a nice time to rebound. We keep going. Boom, look at that. 10-day crosses the 30-day monthly again. Another major recession. And what do we have here? We keep going, and nothing. Nope, still nothing. Even back in the 2020 pandemic, nothing. Still didn't cross. What do we have here? Boom, crossed. Looks like it's going to be a recession. Looks like it's going to be a big recession. So that's one of the major and main indicators that I am using to go make my decision that I think we're going to have a recession. Another thing that I think as well here is we take a look at, there's a channel that I follow called Wealthion. They had a video that they talked about that they uploaded a few days ago talking about why they think that there's going to be a painful market correction in 2023 followed by a full-blown crash in 2024. Now, what that means is that basically they think we're going to have a significant crash in 24. I personally think that's going to happen maybe the third quarter to fourth quarter of this year, based on the way that the real estate market and everything has been going. But there's another major indicator on top of the 10-day and 30-day monthly average crossing over that I think is another huge reason why we are in a recession, and there's a hell of a lot more of downside. And that's the 2-year note. So on the 2-year note, if you go back to the history all the way back to, once again, the year 2000, this covers where the treasury yields are below a certain amount for treasury bonds. And right now, when the treasury yield is below this particular level of below 100, it is almost always an indicator that we're going to have a recession. And so basically what happens is that you have all these major wealthy investors, and then they flood the treasury bonds, the 2-year notes, to where the government says, okay, great, with all this money that you guys are giving us because you're running the safety with bonds, we're going to lower the interest that you're going to receive on that. Well, it's only happened twice to rotate below a certain level in the last 23 years, and both of those were indicators that we had a major recession. One was in the year 2000. If you can take a look here, boom, it fell well below that. That was the big tech bubble. We had the same thing happen back in 2006, which is an indication that we had a recession in 2008. And what do you know? Look here, we have another huge gap down. As a matter of fact, this looks like it's the biggest gap down, even more so than 2000s. As a matter of fact, I think it is. It's even larger than 2000. So what this means is that this is a huge indicator that we are headed for a major stock market crash. Now, what we don't know is we don't know if it's technically going to occur the end of this year or next year, but we know it's going to be here the next year and a half at maximum. And that's just simply because what happens is once these notes once the yields start to rebound and start to rise, this is usually when the stock market starts to finally crash out. Back in 2000, once the yield treasury notes started to bottom out, had a little rebound, looked like it was going to fall more, did a rebound here. The stock market started crashing about the fourth month on to the rebound. If we look at 2008, it took a little bit longer when it hit the bottom, had a little rebound, rolled over, tried to rebound, roll over, and then we had the crash. Take a look here. Huge, huge, huge downside. Looks like it was going to rebound. Now that it's rolled over some more, we don't know how much more this could roll over. Maybe it could go all the way down, below 100. We don't quite know. But one of the things that we do know is that this is going to rebound. Maybe it takes 6 months, maybe it takes 9 months, 12 months, maybe it's the middle of next year. We don't exactly know. But what this does tell us is that there's a 90 some odd percent chance that we are going to have a stock market crash, and it's going to be here in the next year. Why is this so important? Well, obviously, because the most money that people make are in stock market crashes. Another reason this is so important is because they don't happen very often. If you look in the news, you notice that a lot of the times people constantly talk about why they think that we're in a crash, we're in a crash, we're in a crash, stock market crash. They just don't happen often. In the last 24 years, it's only happened twice, people. So this is something that we're thinking about. If you were never born and you're 24 years old, it's only happened twice. If you're 50, the last time you've only had two recessions since you were in your 20s. So this is super rare. Do I think that this is going to be a major crash? I really do. I think this is going to be a significant crash, maybe 65, 70%. And I say that because we have been going up for so long. We have so much of the government money that was pumped into the markets to protect us for the downside back with the pandemic. The time range between 2001 and 2008 was 7 years between the recessions. Look at this. This is up 15 years. It's going to probably be 16 years before we actually either receive the crash or until we get towards the bottom. And so it's literally double, more than double the amount of time since this crash. And this crash here was like 40, 50, I think it was 50% from the highs. And so we're absolutely headed for a stock market crash. The only question is, what are we going to do next? So here's what I plan on doing. I plan on diversifying, and I plan on dollar cost averaging. If we take a look at the stock market, take a look at the stock market performance, over, since the last recession, it's gone up from $82 to $472. Now, do I think that we're going to see this same performance after the next stock market crash? Maybe. No one really knows the future. But I do think that Wall Street and the stock market are probably going to change things up a little bit. I do not think we're going to go another 15, 16 years before we see the next crash after this one. As a matter of fact, I wouldn't even be surprised if it was the other way around, to where maybe we experience a stock market crash of 50% here in the next year or so, and then maybe we get another crash in the next 5 to 6 years, maybe even shorter, because everyone is expecting this super long continuation of a stock market increase, because that's what we've been experiencing. So I do think the stock market conditions have changed tremendously over the past few years. A lot of people are trapped from a lot of the growth stocks that they were chasing, like the what do we have here, like the ARK ETF that a lot of people were in. Netflix was another one that got trapped. A Twitter is another one that got trapped. Shopify. So all of the darling stocks people are in, they are kind of trapped. And Wall Street is not going to let you out of that easy. They're going to try to keep us down if you're in these stocks for as long as possible. And what better way to do that, unfortunately, is to keep you trapped in during a recession. Do I think that you should sell if you're in these stocks? No, I don't. And the reason being is that if you have the risk tolerance to get into the stocks in the first place, you should probably have the risk tolerance to hold, knowing that it's a growth stock. And so you're going to have to be patient. This may take 2 or 3 years, maybe even 4 years before it rebounds, but I do think a lot of these stocks are going to rebound. ARK is a very good ETF, has a lot of growth stocks. A lot of them are, I don't want to say speculative, but they're growth stocks. They're industry disruptors. And so that takes years before you can actually see a significant, huge run up. And so that's going to usually be on the rebound after the crash. Netflix, Netflix is one of these entertainment streaming stocks to where people just love to hate on it. It was the industry leader, it was the darling, it had no competition for so many years, and now it's kind of just had a lot of competition with Disney, with HBO. They had some mismanagement, they had some issues with being very free with their passwords, and now they're trying to tighten things up and they're getting better. So, but I think that Netflix is going to rebound. Do I think they're here to stay? Yes, I do. Uh, are there best days behind them? Who knows? Let's take a look at Apple. Apple really hasn't budged at all. It's just kind of sitting there like the big behemoth 800-pound gorilla that it is. Tesla. Well, we know Tesla. It's the darling. It's the stock that'll give you thousands of percent gains or take all your money from you in a matter of a couple of months. And Tesla's kind of doing what it's been doing. But if you notice, it's still below the monthly moving average of the 10 days. So I think it's still in a downtrend. It had a nice little rebound. Folks, this is a recession. I'm saying all that to say this is absolutely a recession. We don't know when the next leg down is going to take place. I personally think that we're going to see some upside movement here in the next month or two, probably to about based on the percentage of the last two recessions, I'm going to guess somewhere up into the 420 to 440 range. And then I think things are going to roll over maybe in the third quarter of this year. So listen, just be very diligent. Have your head on a swivel. If you are looking for the next crash or looking to make some significant investments, if you're going to do so now, I would make sure that you do a dollar cost averaging standpoint. And what that means is just if you have $10,000 to invest, don't put it onto the stock market right now. Wait for the S&P to roll over 20%. Give an example. That's a nice healthy number. It's only ever rolled over 20%, I think, 3 or 4 times in the last 15 years. Put 5,000 into it. Let it roll over another 20, 30%. Put another $5,000 into it. And you just basically dollar cost average into stocks that you trust and that you believe. And that's how you get paid. That's how you get wealthy. That's how you get a lot of financial stability. I'm telling you something, guys. This is the stock market crash, what I think is of a lifetime. We may not see another stock market crash here of this, what I believe is going to be significant proportions for quite a while. So keep your head on a swivel. Hope you guys found this content very valuable. If you haven't already, please make sure you like and subscribe to the channel. If you guys don't already know, this is a financial education channel. We talk about not only saving, but investing in financial wealth and education. That's what we do here. Like, subscribe. Let me know what you guys also think below. Do you think we're in a stock market crash? And what are you doing to protect yourself and also to put yourself in a position to where you also can take advantage of the stock market crash? Thanks for watching. I'll talk to you later. Take care.